Hi, and welcome back again to Big Time Options, Edges and Hedges, a 2 minutes with Tim trade update on our Ultra Silver ETF trade AGQ. Actually, we did a similar one and closed it out in just a day, 3 days ago, trading days ago. This was one we put on a week ago. This one we're taking off for an even bigger gain. So let's jump in and take a look, shall we? First of all, here was the tweet from January 26th, right? This is on the original video, but interesting way to short silver, right, and sell uber expensive implied volatility. Going out selling the January of 2028 475 straddle for almost $550, right? So upside break even well above 1,000, right? And at the time AGQ, which is 2 times the price of silver, trading just under 400. No downside exposure because we're selling the 475 straddle for more than 475 bucks, for almost 550. So I have plenty of cushion, certainly, right? And have time to wait for the rally in silver, right, which had been so red hot, to slow, if not retrace a little. Certainly, we had that come in. Here was the original video posted to my YouTube channel, as you can see, from January 26th, right, a week ago. So 2 minutes with Tim, the Ultra Silver ETF, taking a head short position by selling uber inflated IV in a long-term straddle in levered ETF for silver AGQ. AGQ, as we said, is the only ETF that targets 2 times the daily return of silver futures, plus IV had gone off the chart. How much so? Here was IV when we put the trade on. You can see I used 120-day IV for long-term IV. Had absolutely exploded to the upside from the previous day to the day we put the trade on. Had ripped even higher, now at the 100th percentile for IV. So certainly sets up for a very nice vol capture trade. The trade, as you can see, we'll see in a second, worked out very well. Here's the chart. You can see here's where we are looking. Here's the day we put the AGQ trade on. It actually went a little bit higher, but lo and behold, finally had that come up and stay right. This sort of price action we really liked once we put the trade on. And again, our break even to the upside was well above 1,000. So this sort of kind of being a little too early didn't have a meaningful impact. But lo and behold, as we anticipated, silver got absolutely walloped finally too red hot a rally. And IV, as you can see here, softening as well, which is typical for the commodity-based ETFs. How much did IV come down? Here's where we put the trade on low, and here's where IV absolutely got plummeted to the downside, right? Finally had the comeuppance from from Friday to Monday, right? Here you can see IV dropping now at only the 82%. So IV still a high, but certainly set up ideally to cover that trade. So the initial trade going out selling the January of 2028 475 straddle. At the time AGQ was just under 400, right, bringing in almost 550 bucks. As we said, no downside on the trade, upside above 1,000. So certainly we can live with that. Doing it one time would tie up a little bit less than 10 grand in margin. Fast forward to Monday's close, right, where we saw AGQ finally starting to rally after getting tomahawk chopped, as we saw on the chart there, right? Here was that huge sell-off, and then it started to bounce a little, so not a bad time to be taking the trade off from a price perspective, in my opinion. Certainly from IV has come in as well, so we got the best of both worlds, right? So we ended up initially selling that straddle, and I used 545. You probably could have gotten a little bit more, right? Covered it, right? It closed at just under 419, so I said you could cover it probably around 420, right? Give a little bit of slippage. So the gain, right, was 125 points, or 12,500 on one contract, right? And certainly position size according to what your risk parameters were, right? Holding period exactly a week. So able to make 12,500 on a one lot in a week. The margins we set a little bit less than 10 grand, but I used the 10 grand. So a nice 125% gain on a very much hedged trade where the break even was over 150% higher to the upside. There was no downside, right? So a way to take advantage of the fact that IV had this huge rip and then finally the pullback. So sell the pump, buy the dump on IV, the absolute rip higher on silver, and the 2 times levered silver, right, had gotten way out over the skis here, as we said on the original video, right, the most overbought it had been in a very long time. Finally had that pullback, didn't hit the exact top, but certainly came within shouting distance. So this is how we go about identifying trades, right, using a fusion approach, fundamental, technical analysis, certainly, and always, always, always IV analysis. But as we say every time, trading is all about probability, not certainty. So position size accordingly, take advantage of the edge, but always put on the hedge. So until next time, as always, here's to good trading.